Good morning, good afternoon, and good evening, friends. Let's continue with the depreciation. So, we have to touch base some more time on the concept of depreciation so that we are clear on it. So, I've taken certain points here, so which is imperative for us to discuss now. So, let's continue with concept. Let's continue with concept of depreciation. Concept of depreciation. See, depreciation is normally charged on uh, plant, machinery, land, buildings, etc. Let me come closer. Yeah, depreciation is normally charged on right, like property, plant, equipment, and like basically they are tangible assets. Tangible assets, right? So which has got life of beyond one accounting period or 12 months or 12 months or 12 months, right? So and they are used for uh, production of goods or services, supply of goods or services, right? And using which revenue is earned by the company, right? So and then, as mentioned, like their useful life is expected to be beyond 12 months or one accounting period, right? So, this is also called as, in short, they are also called as fixed assets, right? They are also called as fixed assets. Fixed assets. So, we discussed in the basic accounting class, like fixed assets are real accounts, and then they are used to earn, they are put into use to earn revenue, right, for the company over a longer period of time, right? So, okay, so they are used to for earning revenue over multiple periods, beyond one period, right? Multiple periods or more than one period, right? So, having said that, what is the cost that you have to take? How do you identify the total cost of fixed assets? Fixed assets are historically taken or normally taken at historical cost or purchase cost, and then we have to add any installation cost or transportation cost to bring it to the place where it is going to be put into use. Where it is going to be put into use. An asset is purchased. Let's say a machinery is purchased, say from Ahmedabad to Bangalore. Bangalore is where the machine is going to be put to use, and the purchase is happening from a supplier in Ahmedabad. So the machinery has to be brought from Ahmedabad to Bangalore, right? And there's a transportation cost involved. And once the machine reaches Bangalore, it will be installed in the factory or the premises where it's going to be used. So the installation cost, and there'll be some laborers or wages that will be incurred in the putting the machine into the workable condition. So installation cost, transportation cost, or any wages etc. are incurred on installing of the machine to put it to working condition, all has to be included as part of the cost of the asset and should be used for calculation of depreciation, right? So machinery, not only its cost of purchase, but also its installation cost, transportation cost, and related expenses like wages, etc., to bring it to the working condition, okay, has to be treated as part of the fixed assets cost. And as we saw earlier, why depreciation? What is the need for depreciation? Why should we depreciate? Why should we depreciate? Depreciation is on the fixed assets, right? An asset is going to earn revenue. And why depreciation means a cost of use of the asset has to be charged on profit because because this asset used to earn revenue. So it's quite logical that when an asset is used, when a particular thing is used to earn revenue, its cost that is being incurred or the usage of the product has to be charged on the profit as well, right? Like for example, an asset can normal wear and tear, or obsolescence, obsolescence, or technical upgradation, or value of asset is also decreasing. So these are all some of the reasons why an asset can reduce in value. Normal wear and tear, and because of the product getting obsolescence due to upgradation in technology, and value of asset is also decreasing because of the reduction in production. Asset is reduction due to reduced production, and these are all some of the reasons why the portion of the asset, the cost incurred on installing the machine to its use, a portion of it has to be charged every period to the profit, the earned profit or loss for the period, to the P&L of the particular period, right? And asset also can get into wear and tear due to time, due to lapse of time. So these are all the reasons why we have to charge the depreciation. See, remember, depreciation is a charge on the revenue that is being earned for the accounting year or for the period, because the machine or plant or equipment is put into use for earning revenue, and the cost of the asset has to be charged over the respective life of the asset, because till the asset is earning revenue, the portion of the asset cost has to be charged into the expenses. And depreciation depreciation need not be a full charge. Depreciation varies. What is a variable depreciation? I'm not. It's not variable depreciation. Depreciation varies based on components. Yeah, this is right. Varies based on components. When we say component, let's take an example of an aircraft, right? Aircraft has got multiple products. Its interior, its exterior, and its engine, its the other equipments that is there in the aircraft, aluminum body. So all these things has got different life. Like an engine, let's take an engine in an aircraft might be having a life of 25 years, right? Whereas exterior or paint or body of the aircraft might have probably 10 years life. 10 years life probably, right? And interiors might have 2 years life. So the entire aircraft cannot be charged as one unit and then charged to depreciation. So the aircraft components has to be broken, and the depreciation or the cost incurred has to be charged into the year basis the life of the asset. Right? The entire aircraft need not be charged for 25 years because of the engine of the aircraft is having a life of 25 years. No. Each component If it is identifiable, let me use this words more clearly. Each component, if it is identifiable separately and also has a different life, then depreciation has to be charged only on the basis of the components, right? This is more clear, right? And aircraft has got multiple components, and each component has got a different shelf life or the productivity life. So the depreciation on that particular component has to be charged separately to give a true and fair view of the financial statements. Now coming back to, since I touched on the topic of financial statements, so how do we determine the why should we charge depreciation again? Why depreciation? Because the product is having wear and tear, obsolescence, etc., etc. But how do you charge? If you don't charge depreciation, what will happen? If we do not charge depreciation to the financials, right? Remember, depreciation, it is a non-cash expenses. We don't pay anyone because of depreciation. It is a charge on the profit, right? It's a charge on the charge on the profit. So it is a non-cash expenses. This non-cash expenses will be used to replace the product when its original life expires, right? When the aircraft is depreciated over a life, when the exterior aluminum body is depreciated over 10 years, the aluminum body has to be replaced. We cannot pour in more capital to replace the aluminum body. So the component, the depreciation that has been charged over the period of time will be taken out and then used to replace the aluminum body of the aircraft. Similarly, after 25 years, the depreciation accumulated, the non-cash accumulated, will be used to replace the engine. Because it is a non-cash, it is a reserve that will be taken. We will discuss about that in more detail as we progress. But because it is a non-cash and there is already a charge on the profit, so there is a money available which will be used to replace the component that got depreciated. Moreover, if we do not charge depreciation, our financials will not show true picture. Financials has to show true picture, right? All the expenses, when there is a production, when there is a goods or services that has been used to earn revenue, all the expenses related to the particular revenue has to be charged, right? And if the depreciation, knowing it is there's a normal wear and tear on the machinery, etc., if there is no charge on the profit, then your financials will not show a true and fair view, right? And also, we require funds for replacement. That's what we saw earlier, right? Funds for replacement is required. Unless we charge depreciation, then there will not be fund available for replacement of the depleted asset, right? And then now, what are all the three factors? What are the factors that determine depreciation? Factors that determine depreciation. One is the cost. Then next one is life of the asset. Then third one is residual value. Cost, life of the asset, and its residual value or a scrap value that is available, right? So let's take asset cost. Asset cost is 1,10,000, like 1,10,000, and life of the asset is 10 years, and residual value 10,000. That's 10. After 10 years, the asset will have a value of 10,000 rupees. When it is resold or etc. or scrapped, it will fetch 10,000 rupees. So depreciation is equal to asset cost minus residual value divided by life. asset. So in this case, is equal to 1,10,000 minus 10,000 divided by 10, right? Divided by 10. Formula ಎಲ್ಲ 10,000 rupees will be charged as depreciation every year. Okay, so then another question that should come in is, once the asset is put into use, there are additional expenses that is being incurred. Can that be included as part of the asset cost? No. Any additional expenses incurred after the asset is put into use should not be included in the asset cost. It should not be included in the asset cost. We'll discuss about that in detail also separately. When what all the areas when this has to be included or when this should be capitalized, etc. We'll discuss about that in detail. Right now, hope this is clear now. Right? You can come back to me for any queries or clarifications by sending an email to me at babupriya@creditmail.com, and I'll come back to you with the clarifications. Or you can also send your notes to this video, and I'll get back to you as soon as possible. In the next class, we'll discuss about ways of calculating depreciation. I'll give a hint like it's a straight line method, return down value method, and units of production method. We'll discuss about this three high-level overview, and then also try to solve some of the questions and answers related to the depreciation one. So any doubts or clarifications, please come back to me, and I'll get back to you soon. Thank you, friends, and have a great day.